Hey, this is Mac with PriceActionTradingSystem.com, and it is Thursday. It's November 19th. This will be our chart lesson for today. And just a reminder, no chart lessons on Fridays. I'm trying to take a break, so if you're new and you're wondering why there's no chart lessons on Fridays, just because I don't do them anymore. It just gets to be, uh, I need a break occasionally. These videos take a little more time than you would think, and so I'm trying to get out of here early on Friday just to get a little break. So anyway, I did want to announce one of our members. His name is Evan. He's doing a video on Fridays of his own, and he's posting it to our in our forum under. He's putting it under. Where is he putting it under? His username is Bedor. I'm not sure what his username is. Bedorusrex. Bedorus Rex. I guess that's how you would pronounce that. Bedorus Rex. Bedorusrex. So if you're a member of our forum, you can go in there and look at his video analysis on Fridays. I'm just trying to see where he's posting it. I don't think it says. Oh, he posted in the journals section. I don't know why that was so hard for me to see, and I'd already read it once, but I couldn't remember where he said he posted. But anyway, his name is Bedorusrex. Bedor. I think this is part of his name and then something else here. Bedorus Rex. So I don't know if that's. I hope that's coming across. Bedorusrex, and that's a little bit hard one to remember. So you probably have to write that down. Bedorus Rex. Okay, I'm gonna leave it at that. But anyway, if you're in our forum, you can go find it under the journals. You'll see it. He says he's been posting them on Fridays. Um, I haven't had a chance to look at his last one, but if you want to watch somebody else do a chart lesson, there's an opportunity. So obviously you got to be a member of our forum. And again, I've still got the temporary, if you where you can join just the forum for $10 a month. Obviously you can't see any of the other premium membership stuff, but you can at least go to the forum. So I'm going to leave that open maybe another week or two, and then I'm going to shut that down, and you won't get an opportunity at that. It's $10 a month. The first fee is $10, and it's $10 a month thereafter if you want to be a member of our forum. And it's just a temporary thing that I'm doing to give some of you a chance to read our forum without having to join the membership. So, and it's probably not fair to me to leave it open too long at that price. It's just kind of a little temporary introductory to get some more members in there, and we don't want to do a free forum just because I don't want it to be a free for all with everybody and their brother coming in there. So we do charge a little bit, just so if you want to be a member, it's worth your while. You got to really want to be a member, in other words. So just to keep out people that want to come in and cause trouble and all. The only stipulation I ask if you do join our forum is no profanity. We do have we've got some young 17, 18-year-old traders in there, maybe even some younger ones. We've had some as young as 15 in there before. So we do have some young, impressionable minds, and there's just no need for any profanity or anything. And the other thing is just be nice. If you disagree with somebody, that's okay, but just be nice about it. People tend to get their feelings hurt, and then people start arguing back and forth. And so far, our members have been very good at not letting. I'm not going to let it get out of hand. I tell people up front that if you come in and you create trouble or you start using foul language and stuff, I'll probably just ban you, kick you out temporarily. I'll probably give you a warning the first time. But if you've ever been a member of any of these forums, you know what I'm talking about, and we don't want that. So that's the only thing that's my only stipulation. So let's get to the chart lesson. I want to wrap it up. It's Friday. It's already late. I've been having to step out in the afternoon, so I'm coming back in just to do these videos. Um, just so you know that I'm having to do these a little later than normal, and I'm coming back just to do these just for you guys. So not trying to pat myself on the back, but I just want you to let you know that I do sacrifice to do these videos, and I know they're helpful. I know you got a lot of people are sitting there waiting on them, so I try to get them done, and we'll keep doing them Monday through Thursday on regular trading days as long as I'm not on vacation or something. I hadn't taken a vacation this whole year really, so I'm probably going to take the last couple of weeks of the year off, and I'm probably not going to be in the forum. I'm probably not going to be doing any videos, and it gets slow then anyway. So a lot of traders usually take off those last couple of weeks of the year, and so we'll see. And at some point, I'm going to take a vacation, but I'm kind of waiting for the COVID thing to go away to make it worthwhile going on vacation. But anyway, let's back out. Let's talk about the trades. Really, this is a range day, and you can see there's two different things going on. There's the big yellow range is what we really the overnight highs and lows, which is what we kind of started out with, but it got tight in here, and you can see the green one was in play. We broke out of it a few times on each side. Uh, we got into it right here, and we broke out and tested the lows, then we got back in it, and we failed out each side a few times, and then late in the afternoon we broke out and went higher. So most of the trading today during regular trading hours was in this green range, other than these few times we broke lower here, and one time we broke a little bit higher. But on the other hand, there's a two-tiered channel that's working up, and you can see that midline down through there. You can see prices are obviously playing off that midline. And this is what's interesting. People will tell me that you can't find these trend lines early and they're too subjective. But look, you couldn't really draw this trend line. The starting point was around 8:30 or so, and you couldn't really get the low point until noon. So you draw that at noon, and you drag it to these highs, and lo and behold, look at the midline effect where prices are affecting that midline prior to noon. So it tells you there's something to this. That's not a coincidence. Somebody, I mean, hopefully you can see what I'm trying to tell you there. And look where it came back in. Of course, by this point, it's obvious. But over here, there's no way to know that channel's there really. And you can still see that midline through there affecting prices. And then notice how it came back into play up here. We got a little overshoot up here, but it did come back into play, and you can see that channel. It drops down, and look how it gapped over it right there. I mean, that's a huge, okay, well, that's where it closed and reopened. So we had a little gap on the reopen there, and that's what that is. But notice where it gapped over, and I see that a lot. If you see prices gap over a trend line, that tells you, usually it's not that big a gap. Usually it's just a tick, or maybe the bars don't overlap at that point. But you can clearly see prices gapped over that. I don't know why it does it. Don't ask me, but I see it over and over, and I know to pay attention to it. So a lot of times, if you see that gap over your trend line or your midline or something, it kind of confirms that you got it in the right place. So this didn't really help you much, because really these trades right here, the range helped you with. And so the only thing this might have helped you with was a target up here. So I'm going to take it off, but I wanted to show it to you just in case because some people might have played that, because it does have a little upward bias. Really, it's mostly sideways in here, but after this point on, you could say it had a little upward bias. But let's back out, talk about the trades. You can see the big picture there. And I may not have said this in a while, but the market is layered. And so you've got the big yellow pattern is layer one, and then you got a tighter range here that's maybe layer two, and then you got these little micro trends layered in there at a much higher level. So the market is layered, and that's what a lot of people don't understand, is that even within this big range, you've got a two-tiered channel working up right here. Within that two-tiered channel, you've got a micro trend, a micro range, another micro trend. So all of that's going on within this big yellow range day. So there's trends within trends, trends within ranges, ranges within trends, trends within ranges. and it all meshes together, and you have to learn to see that. So I hope that's clear. Hope that's understandable. If you're new to price action and chart reading, it may feel a little complicated, and it probably looks complicated. But once you get used to this and you understand what we're doing, it's really not that complicated. It's a skill. It takes time and effort. But let's get on the trades because I'm 10 minutes here, and it's already 6:30 and haven't talked about the first trade. But you can see we're going sideways here and we're trading. We actually had a little bit of a trend down, and we just popped back up and we kind of got back in this original range here. Actually, we went into a range here. I didn't really show this since it was so early, but let's just put this on here. But you can see there's a range right there, right? And then so when we break higher out of that range, measure that. And all we did was we just made a little measured move up here. And you can see we made a perfect measured move basically. So you can get the measured moves on the ranges the same way. And all we did was we just went into a range up here. So really what you got going is a two-tiered range within the larger yellow range. And so we were working both sides of this range, but we were finding all our resistance here. And most of our support was across the midline here. So I hope that's real clear. But anyway, you came up here, you made that high, then you made the measured move on a little push higher, and then you made a double test. So you made that high and you really double tested it, and you couldn't go higher, and you get this bearish bar with plenty of room back to the EMA. That's a great place to go short. It's the first trade of the day. Quick, easy scalp. And then you try to go higher once, you get a second entry long, and it fails pretty quickly. And this actually breaks higher and turns down on a little engulfing bar. You could still wait till here to go short, but I typically like when it breaks higher like that and turns down, you probably got Trader's Trap. That's also a second entry short. Notice the new low, first entry, second entry. So you got a failed second entry long and a second entry short and a great bearish bar or engulfing bar, however you want to look at it. It's both. And then you made a lower high right here with another chance. And if you caught this one, you likely probably got a runner and you could ride this all the way down. The way I would play this, if I caught this runner, I'd exit a few ticks right in front of that low where we bounced before. And that would get you out within maybe a point and a half of the very lows. If you can get that much of a move, you're doing great. So don't ever get mad at yourself if you can't get all of a move, you miss it. Generally, I'll look for the next important support and resistance area, which is right here, and I'll get out a little bit in front of that because sometimes it'll bounce early and take off on you. Because that's what smart traders are doing. They're not trying to get all the move. They want to be safe, so they start buying in here, and then the buying starts coming in, and sometimes it'll bounce early, but usually it'll bounce right at the line. It might push through, or it might be just a little short. So that's the reason I like to get a few ticks in front of it. But that was a nice move. If you just caught either one of those trades, you're probably done for the day. And actually, there's a new swing high here because it's higher than that swing high. So there's a first entry and another second entry that fails. So another chance to go low. I marked this one green. It is a failed second entry, but there's not a lot of room back to these lows, and we bounced there last time. And you can see we closed right on it before we went through. So in order to trade this one, you'd probably have to let it break lower and then drop a limit order a couple of ticks back to give you room, just to be sure you can get out. So I marked that one green because it's not a real clear trade. It's a little more advanced. So, but that'd be the way I would trade that one. That's why I marked it. But then we come down here and we get a little failed break lower. We make a higher low here, but that signal bar is not good enough. This looks a little like a reversal pattern. It's two legs up, a failed second entry short. And you do have this channel working up. The problem is you got your range here and you're going long right into what was support, and it just acted as resistance. So you got to be real careful going long right back into that. And so if you did take that trade, when it breaks higher and you just start going sideways like this right here, this is one of those where if you can get out with a tick or two, take it. And you could have got out with a tick or two before it would have stopped you out and then gone exactly where you thought it was going. We traded up into this, so the odds are we're going to trade higher here, maybe, unless this resistance just continues to hold. So you would measure that leg, and when we do go higher, look for a possible measured leg. See where it goes. If it goes back up to these highs, that's probably where you want to take your target. And look at that. And it actually went a little bit higher than that. So I would have taken my target just right about there. Or at the very least, a few ticks in front of that previous resistance up there. But you get two legs up and then we're going down again. But anyway, it's just, if this bar was a little lower here, you might could have got in this, but you're going long right into the middle of that little range right there, and you just don't have room to get out really. Again, if you let it break higher and it backed up and you could get enough ticks in there, you might take that one. But that'd be the only way I'd take that. It's just too congestive there, and there's too much resistance just right there, and we are outside. I drew this trend line up through here, but maybe I moved this thing because I think I had it a little lower earlier. I think I accidentally moved that because now you can see it's fitting properly. So that was the reason I was liking going long there, possibly because it's off that trend line. But I still would skip that. So, but somehow I moved that trend line and I jogged it over a little bit. Now you can see prices are turning properly there. So somehow I had that one. I moved it somehow. But anyway, you continue up here, but you just don't want to go long way up here without a really good setup, and you don't get one. And then you get a little failed breakout. This is too congestive. There's a little room back to the EMA, but that's not a very good signal bar either. Wait on a lower high. It comes right here, and it's a real small bar, so it's real low risk. You can see it's like $87.50 risk, but it's right into the EMA, and you are expecting prices to go down, so it's one you might mark green. I think you're better off to skip it. I'll go ahead and mark it green. But I wanted to at least talk about it because I guarantee you somebody took it. And if you did, just understand it's a little aggressive, but it's still a lower high when you're coming off a range. I would say this though, it's the first break of this channel, so there's still a chance it could break lower and turn back up and try to make a new high, which it does, but it can't even get back up to the resistance again before it turns down. And the reason I have this marked, people are probably going to look at that signal bar, but you got a new high. You try to go higher once, twice. So now you got a failed second entry long that didn't even get back to the resistance here. And so when it breaks lower there, that's going to be a trap. It's technically a trap when it breaks lower right there, but I'm not sure if it broke lower first or broke higher first. If it broke higher first and turned down, you could actually go short right there. The key is your stop would have to go above the last high until this bar closed. So your stop would have to be up here. So it makes it relatively risky to enter that on an engulfing bar if even if it broke higher first and then went lower. So I'd probably wait for that bar to close and then go short because you're taking on a lot more risk right there because your stop would have to be up here. So the reason is because until this bar is set and you know the high to put your stop above, you have to go above the previous high, which is way over here. So make sure you understand that. But you do drop down here and make a lower high. And those are matching highs with a bearish bar. You could take that short. And you actually come back here and get a failed second entry, but it's too congestive right into either the midline or the lows of the green channel, however you want to look at it. It's just too much support there. It works, but you don't know that ahead of time. And so what you end up with is a failed break lower here. I marked this one green because it's probably going to come back up and test this. The only problem is this trend line is still in play. And you could touch that trend line and turn down. But as many times as we bounce there, we're probably going to pull back and test that even if we're going lower. So you may want to risk that one. Look how far we are away from the EMA. We're past due to come back to it. And a lot of times these will lead, these little failed break lower. How do you, I'm not sure if I'm saying that properly with proper English, but it's a failed break lower. I think that's the best way to say it. And it's actually broke lower. Oops. It actually broke below that little 2-bar matching high and probably trapped people and turned up. So it, and notice how it rockets right back up to the EMA. That's a sure trap. I like going long there. It's aggressive because look, if you tried it right here, of course it doesn't quite set up exactly the same, so the context is a little different. But it would be no different than trying to pick the bottom here, and you got it wrong. But the little 2-bar matching high and the fact that it broke lower and then turned up and went out the other side, that's a pretty good sign. It's probably going to trap people. And your higher low comes here. You don't want to go long right into that previous, what's acting as resistance, and you don't want to go long right into the EMA. But it pushes up, pulls back, and tests the previous support resistance. It acts as support. It's a failed second entry short. There's 2 legs up, and you got a nice bullish bar. Go long right there. And look to go back to the highs. And sure enough, that's exactly where it goes. It even pushes on out, and you get a failed break out the other side. And just like down here, those are often important highs or lows. And so you may take that trade. It's aggressive. But the reason I like them is because they lead to these big moves. And you get easy. These are ones I always try. If I do take these aggressive trades, I try to hold a runner. And you would have got a runner on both of these easily. And that's why I like them, and that's why. But they're aggressive, and you're going. Some of them you're going to lose on some of them. But if you catch these runners and let them run, they more than make up for a loser or two. In fact, a good runner can make you 5, 10, 15, even 20 scalps on one runner. So keep that in mind, because if you do catch this, and as long as it's still running down this trend line, I'm gonna hang on till down here. And that's right where it bounces. So that now there's a lower high right here with still plenty of room back to the EMA. And there's actually a reversal right here, but you're getting right into the middle here. You didn't quite get back to the EMA. It does look like 2 legs down. It's a very small bar, so very low risk, $87.50. And there would be room to scalp out, but it's just right in that little midline. And there's 2 midlines there actually, because you have the midline from the green channel, and then you have the midline from the bigger one. So that's like a little bit of a witching area there that you got to be careful with. So anyway, you might take that trade. If you took that as aggressive, I'm okay with it. And then of course, see, we bounce a little early here, but then we make a higher low. And so I like possibly entering there on the higher low. You've already had your break, new low, then a higher low, and you got a little room back to the midline there, and hopefully you're going back up here, and it does. And then you make a lower high right here with another small bar. It's nice seeing these small bars. It's been a while. So just go short right there. Another easy move down to the lows. And then it bounces again. You don't get a setup on that one. You do get a higher low right here, but by the time it triggers higher, you just got congestion. And this is just kind of moving along that middle, so be real careful with that. This one's tempting, but again, it looks like congestion. But notice you come down first entry and then second entry. And at this point, we've bounced right along there several times. Look how many times we've kind of bounced along there. So with a second entry long and a little room back to the EMA, I like that one. Runs back up to the top. It gives you a second entry short right here. I didn't mark that one. You could take that, but I don't think you would have got in it, because notice the little gap right there. In other words, this closed on its low and this opened on its high and traded right back down. And normally these bars will overlap at least a tick, and it doesn't overlap. So there's a little gap in there. And this rocketed real quick. You probably would have had to use at least a limit order to get in it. If you took it, I'm okay with it. But I doubt you could get in that trade, and it moved really, really quickly. So I guess people thought we were going higher since we were making these higher lows. But as long as this range resistance is in play, don't be thinking that. There is a higher low right here, but don't take that. I don't think you want to take that one either. That's just not a very good signal bar. If that was a perfect signal bar, maybe. And this obviously traps some people because look how quick it moves right back to the bottom. And you don't really get rejection here either. There's people still trying to sell this. So I don't think you want to go long there. Wait on the higher low, which comes right here. And there's your low, first entry, second entry. So it's a failed second entry short. It's not above the EMA, but we're coming off a range, so we're looking for prices to go back up. So I like that one. And then it confirms this trend line right here, and this is a second entry long. Notice the new high, first entry, and then second entry. And the real key, though, is it's right off that trend line, and it confirms it. You got your first two swings right here and here, and then this confirms it. And you even get another bar here. This one's bouncing off of it, too, before it breaks higher. We come back here. You actually get a second entry long right here, but you're not back to the trend line, and you got three bars kind of going sideways with all kinds of stems. Then you get another one, then another one, then another one. Don't enter there. It works, but there's too big a chance it runs up here and touches and turns down. We push on up. All of this, you could argue there's a failed second entry short right here, and if you'd gone long, it would have worked, but it's not back to the trend line. It's not back to the EMA. It hasn't even come back and tested this support resistance, which normally you're going to test that before prices are going to go higher. And if they do go higher, it won't be long before they usually do come back and test that. In this case, they didn't. But I wouldn't want to go long off of that because there's too big a chance. And you see prices tried, but this trend line holds. And I like this long right here because it does kind of come off the EMA, but better than that, you came back right here, you made the low, you came back, you tested it once, and you came back and tested it twice. So you get a double test off the trend line, nice bullish bar, it's kind of a reversal bar, and it bounces off the EMA. So you got the support, a double test, you got the trend line, you got the EMA. If it breaks higher there, go higher. The thing that bothered me about this one was the next one didn't. And so it's not really rejecting it yet. But you just got so much confluence there that I think it's probably going to push up and keep going as long as that trend line holds. And you can see the trend line holding all the way up, and finally people realize and say, oops, we're going higher, and look at it go. And really what made this probably run up like this is you had a lot of people getting short in here on this range, thinking this thing's going lower, and they all have to exit here. And once it starts climbing like that and breaking out, it attracts more buyers. So you not only attract new buyers, but you're running these people's stops. And when it breaks above here, it really hits some stops. See how it jumps up real fast and it just keeps going. So there's all the people that were getting short, playing this range and stuff, their stops are a lot of them are up here, but there's probably going to be a bunch of them just above these last highs, and the last high was here and here, and so that's where most of them are going to be, in that area between those highs and up here. And that's why this rockets up, because it's just hitting all those stops of people that are short up here. So I hope that's clear. But that runs up, and that pretty much, I don't really see anything else. I don't think you want to go short up here yet. You're still looking for longs. And that takes you into 2 o'clock, and I don't see anything else there. So, but pretty good. I mean, this is a little, you have to be able to trade ranges, but if you can trade ranges, this is a pretty good trading day. If you just wait for the ones off support, there's plenty of them today. There's several of them off resistance. The stuff in the middle is what you got to be careful of. And you can see I've got, once it was obvious this was a range, I've got maybe 1 or 2 greens in there. Otherwise, you'll notice that most of the trades are off the lows or off the highs, or maybe the first lower high or the first high or low. That's the way most of them are going to be marked, because that's your high probability trades, is off the support and resistance. So anyway, this 30 minutes worth, I didn't think it would take this long today, but I spent 10 minutes talking about other things. So I'm going to wrap it up. I hope you had a good week. We'll We'll be back again Monday. I'm done for today. Don't forget about Evan's video if you're part of our forum, if you want to watch that. I promised him I'd mention it. And otherwise, I'll see you Monday. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.